Dynamic approach of Fibonacci study having two basic differences. Number one, you are deriving the price range from the volatility by multiplying the volatility with the last traded price. You are deriving the price range, and using that price range along with the Fibonacci retracement ratios, you are adding or subtracting with the last traded price, or sometime it will be a opening price of the day, and you are calculating the trend points which you are following in the subsequent trading session. So this is what I have told you in the first session. Second session, I have focused on the one standard deviation principle, wherein I have told you one standard deviation is nothing but a principle wherein it says that your stock market price, which is a fluctuating instrument, the price of a stock or price of a indices or the price of a commodity is a fluctuating instrument. It is a dynamic instrument, and it has all probability to violate its moving averages or all its average principles. So that principle says that at any point of time there is a chance that 100% it will deviate from its original calculation. So original, whatever, means in simplest way I can say, if you have calculated a 5 days moving average, one standard deviation principle says this 5 days moving average will be violated in some future date, and the chances of that violation is 100%. That is what one standard deviation says. So using that one standard deviation formula, we have calculated a price range, and we have used that particular thing with the last traded price of the instrument, and we have calculated the trend points, and that particular method is highly successful in intraday as well as in the positional trade. So this is what I have told so far, and today I am going to take for Gann angle and volatility, this particular event. So this is a 1 month program scheduled from 7th of April, and it is going to continue till the end of April. So this we have divided into two phases. One, you will be learning on the concept of trading. Second, we will be practicing those same concepts what you have learnt in this session in live market to test its success. So this two phase of program is now under progress, and you are in the first phase of this particular program. And to inform you, we are the only one company in India which gives this facility to traders, and we are purely dedicated for your trade improvement. Many of you will be successful traders. Same time, many traders are also failure traders. Same time, many have failed miserably in the trade and lost huge money. If you compare between the successful traders and failure traders, the success counts very few, but failures are more. So here our mission in Smart Finance is to teach you specific valid concepts which we have already tested in the market, which we have already experimented on the market, and which worked in the market. And based on that, we have devised these principles, and we are going to promote these principles. So accepting those methods is purely in your domain, and accepting those particular concepts is purely in your hand. If you feel these concepts gives profit, work in the real market, then you accept, else reject it. However, these methods what I am teaching from the past 3 sessions has a great success rate. When I talk about success rate, I have already tested it and you are going to experience it in the live sessions. And many of you are also experiencing our one standard deviation weekly trend forecast, which we are flagging every week in our website under the home page. Herein you can download the Nifty and Bank Nifty weekly trend forecast and test it also. So that is also, you can say, one of the proof that available. Whenever I talk about the Gann principle, I have authored a book on the Gann's principle also. So Gann principle starts with your square of 9 principle, it goes to square of 12 principle, and you have, this is the numeric principle, post which you have a principle of price to price squaring action, you have price time squaring action, Gann angle principle. These are the some calculation related methods, and post which you have also Gann astro analysis, wherein you are analyzing specific things. However, in the Gann principle, whatever the things I have authored in my book, the concept what I could able to understand, the same thing I have translated in that book with my own innovation. And coming to this Gann angle and volatility, this is my own principle. Gann angle concept I have taken and I have infused the idea of volatility into it. So here what we are going to do, it is a very simple process and very powerful process. We have to calculate the price range from the daily volatility, and using the Gann angles 11 trend line angle factor to estimate the resistance and support price ranges. Once we found out these things, the resistance and support price ranges, we have to take a reference price point from where we will do our calculation. The reference price point will be the current price or the last traded price or the opening price based on the market behavior, added with the resistance price point whatever you have calculated, multiplied with the Gann angle factor. Support will be calculated from the same reference point which is being used in the resistance. Either it is current price or last traded price or open price, and it should be subtracted from the price range multiplied with the Gann angle factor. And fifth step, your decision to buy or sell comes whenever you have the price crosses the third resistance line, you will be purchasing. Whenever the price fall below third resist support line, you have to sell. This is how you have to do. And one cycle, once these 11 trend lines are crossed over, then one cycle is completed, then you have to go for the second cycle. The second cycle again you have to start with where you have ended the first cycle, from there you have to start it. So this is what the Gann angle and volatility principle is. I'm going to demonstrate that same thing with an Excel program. I am going to demonstrate the backtesting report of this particular method also. So Nifty future has closed on Friday at 7583. This is known to all of you. 7583 is the last traded price of the Nifty future on Friday. So, and the volatility estimate of Nifty future based on its past 10 days data reference is 0.001. This is our daily volatility, and Multiplying this daily volatility with the last traded price, I am getting the 76 point of oscillation is expected in the Nifty future on the coming trading session, which is falling on the 11th April 2016. This is 76 points of calculation what I have got. I am multiplying it with the all degree factors. So here the degree factor from where it has come, WD Gann's principle, it is telling that you have 11 trend lines. This 11 trend lines makes different angle with the x-axis. If you are little skilled in the geometry, then you will be knowing that this mathematics says that there is a two axis x and y, and these trend lines are making different angles with the x-axis. First trend line makes 3.75 degree, second 7.5. So like this way you have 11 trend line. The 11th trend line makes 86.25 degrees. So coming to this degree factor, 180 degree is considered as a factor 1 as per the WD Gann. Why it has been considered? Because 180 degrees assumed that your sunrise to sunset, which is one day time, it takes 180 degree movement by the sun to sunrise to sunset. One of the half circle it completes. This is one of the validations. Likewise, WD Gann has given many validations to justify 180 degree is equal to 1. So the number and the degree, there is a relationship he has established through this particular relationship. So whenever I talk about the 45 degree, so that means you have to take 1 divided by 180, 180 multiplied with 45. So this will give you 0.25. So 0.25 is the degree factor of 45 degrees. So 45 degree presents a factor of 0.25 in number terms. So all these angles is being devised based on a semilog scale. So this x and y, if you draw in a semilog scale, there is a specific logarithmic scale is there. So wherein you have to, or the graph paper is available wherein if you can draw these lines. So if you take the entire set of line as 360 degrees, so 1 by 16 means 1 unit of price change happen in the 16 unit of the time. So 1 by 8 means 1 unit of price change happen in the 8 unit of time. When I talk about 16 by 1, 16 unit of price change happened in 1 unit of time. So based on this trend lines are being defined, and this trend lines degree also is being given by WD Gann as per the semilog scale presentation. So if you want that proof that this is a 3.75 degree, I cannot able to do. You have to approach to a mathematics teacher who can draw a line and demonstrate you. So for my uses, I have taken 3.75 degree in the degree factor term is 1 divided by 180 into 3.75. This is how you have drawn. So this is a upward trend line. Similar way, you have a downward trend lines are also when the prices are falling from the top to bottom. So that time also it will represent in a different way because your scale will be inversed or the scale will be reversed. So your scale will represent in this order. So 1 unit of price change if happens in the 16 unit of time, in a falling trend it represents 86.25 degrees. So this is how the degrees is being defined, degree factors are being computed. Then based on the volatility we have calculated 76 points. That 76 points we are multiplying with the degree factor. So all the cases only we are multiplying that particular price range what we have derived as from the volatility with the degree factor. Once we got that calculations ready, and once we have made that particular calculations ready for us, then we have to go for the other part of the calculation. So here the second part of calculation where what says that the numbers in particular Gann sequence is presented in a form of square root of number plus or minus degree factor whole square. So it says, like, this is a very small example I can give you. So whenever you will talk about a number 8 and a number 15, so though in mathematical terms you will say that 15 is only 7 added with 8, but as per the Gann principle, 15 is a number which is 180 degree above 8. How it has come? So he has taken the square root of 8, added with 180 degree factor which is 1, taken the whole square. This is how the numbers residing above that number is being calculated, or the number residing 180 degree above that is being calculated. Same principle we are going to use it here. So we got 76 points as per the volatility estimate. However, this 76 point represent only through one volatility estimate which we have calculated. But if I say, as per this, give me a number which is this is the 76, give me a number which is 3.75 degree, or a number which is 3.75 degree above 76, and give me a number which is 3.75 degree below the 76. Then how to calculate? So for that I have to take the square root of this 76, add with the 3.75 degree factor, 3.75 degree factor. So whatever the result I will get it here, this I have to square it to get a number which is 3.75 degree above the number 76. This is what it is telling. Similar way, if I want a number which is 3.75 degree below the 76, then I have to take the number 76, subtract it from the 3.75 degree factor. So 3.75 degree factor is nothing but the 3.75 divided by 180. This entire result I have to take a double multiple of the square so that I can get the number which is below 76 with a proportion of 3.75 degree. So this is the relationship we need for our calculation. So it says now 76 point of oscillation is expected as per the particular principle, or as per the volatility. However, every degree line or every resistance line has its independent price range, or every resistance out of this all 11 trend lines, every trend line has its independent price range. For 86.25 degree, it is an independent price range. So every trend line is having its independent price range, and that we have calculated through this process. Square root of 76 added with the degree factors, then we have taken the whole square of that, and square root of the number subtracted from the degree factor and taken the whole square. So these are the things we have got. After getting that things, our calculations mostly got over. And then what we have to do, we have to take a reference point. What we have taken the last traded price in this particular case, and we have whatever the resistances and prices we have calculated, that multiplied with the degree factor, that we have to add with the reference price to get all resistance lines, and same way we have to subtract from the reference price to get the support numbers. So this is what we have done. Post which our trade decision. So WD Gann always mentioned that till the price didn't move above the third trend line, you should not rely on that trend. So our case, the third trend line in the upward side is coming to 7589. Two trend line, first trend line 7584, second is 7586 in the upside. Third trend line comes to 7589. Similar way, our third trend line in the downside is coming to 6.79, rounded to 7577. So I'll be concluding in this order. If Monday market opens above 7589, I will be purchasing with an initial target of 7603, because this is the target where I can find out a maximum resistance. Successfully, if it penetrates, then I can march towards the 7623. Similar way, if I am selling here, my first target will be 7565. If I successfully penetrate this, I can come to 7550. Imagine I have achieved all targets. 7550 I have achieved in the down. So what next? So I have to go for a second cycle in the downside. 7550 onwards I will take. So 7550 onwards, if it is telling, it is going for 7517. So imagine I have achieved 7517, then what next? This is the third cycle I can go for. This is how the each cycle by cycle I can go for, and each cycle by cycle. So in a intraday we expect 3 cycles used to happen maximum, and sometimes it go for a 5 cycle, but beyond 5 cycle very rare, very rare. 3 cycles majority of the cases, if it is volatility is more. 5 cycles it has a chance, however beyond that it is not a reliable factor, but sometimes it goes to 7 cycle also. 3, 5, 7, all these cycles as per a different branch of study, which is saying that your cycle theory on this trend. So that says that you have a move to third cycle, fifth cycle and 7th cycle. So this is what the Gann angle and volatility technique is. It is highly reliable for intraday trade. It gives excellent success in intraday trade. However, you have to keep in mind, though this is a trade having a greater success rate, but you have to hedge your position. Hedging is also equally important for your trade. That is a good practice. Earning money with a right experience is good. Earning money with a wrong experience is very bad. Some people say that buy one option at 2 rupees, you will get at 20 rupees. So you may get out of 10 trades, if you are getting 5 trades or 6 trades also, if you are thinking that is good, I will say that it is very bad. Reason is, though by luck you are getting this particular achievement, but this is a earning money with a wrong experience. Same time, if you are following particular principle without hedging in intraday and getting some profit, that is good. But without a money management, if you still do the trade and earn money, I can say that you are earning money with a wrong experience. Whenever you are earning money with a wrong experience, when the bad period comes, or whenever your decision process goes wrong in one incident, it will take out all your profits and it will give you a very bad impression, which from where you may become wild and you may not find a way and you may reject many methods. So it was not the method which was wrong. It was you who is wrong, who has not done any money management with the anticipation to get a bigger profit. So that is what, follow any principle, but hedging also is equally important. So this is what you have seen in the Gann angle and volatility. I have taken this particular April month's data, and these two are not wrong. So these two dates are quite wrong. It is, you can say, from I have taken from the past 90 days data, and I have calculated as per this particular principle. And if you yourself can form a Excel sheet in this order, calculating the volatility, taking the price range, buy entry 15 degree, sell entry also 15 degree, buy entry targets, sell entry targets, if you can able to calculate in a Excel sheet and just go for this kind of one calculation to validate how many trades in this particular 90 days of particular 49 days of experiment it has successful, you will find out more than 80% of days it has given a clear trend breakout and given you a very good success without any particular adjustment. If there is a gap up or gap down, you have to change your reference point from to the gap up price, the opening price, or the gap down price, the opening price. In more than 80% of cases, you will find out this is a valid technique and it has rewarded the profit. 20% of the cases is failure is there. So this is how the technique is translated. You have to calculate the volatility, post volatility, you have to calculate the price range. After taking the price range, you have to calculate the two different price ranges, which is one is above your particular trend line, Gann trend line, and another is below particular Gann trend line. So after calculating those price ranges, then you have to take one price reference point and add it with the calculated price range multiplied with the degree factor or subtract. So by this process you have to define, and the third trend line crossover you will be buying, putting the opposite side of the third trend line crossover as your stop loss, and you have to anticipate a maximum success of 16 by 1 trend line, and once that cycle completes you have to go for a second cycle. This is what it does. And we have a full-fledged course on this Gann's method. So those who are buying this Gann angle and GAV course, you are getting a Gann method book, printed book, which describes most of the Gann principle, valid Gann principles, plus the GAV software you get, that Gann angle and volatility automated software. You also get a course on the Gann angle and volatility. What is Gann angle and volatility? Based on that also you can get a complete course on that. So this is also one of the successful method for day trading. Register for this event of second week, which is starting from Monday, which describes on the option strategy, how you can form using 1SD method, pair trade, using beta decoupling, which is one of my best innovations so far, beta decoupling. Weekly positional trade, how we can do successfully, delta neutral option strategy, how we can form successfully. All these things you are going to learn on the second week. And some of the plannings associated with your investment, associated with your pair trade and option combo, and all these things of how you can be a successful investor. So that also I am going to give you a dedicated session for investor. So little bit of planning make you a very good investor, wherein I'll take specific part of the mutual fund, specific part of our stock market investment, specific part of ETFs, how you can swing between all these three different asset class and be a successful, that you are going to learn on third week. And we have given this time we have given a very comprehensive practice session. Entire 1 week I am going to give you the practice session. So wherein the concept what you have learned, how it works in the market, that you are going to learn. So all these things is there in the subsequent programs. You can log on and register if you have not registered. If you have already registered, then no need to register again. And you can invite your friends to join this program because this is a free program. No string is attached to it. Nothing you have to pay. If you feel any of your friend is in need to learn certain kind of concept, invite them to join this program. So that is on behalf of me, you can think of inviting your friends if you think they also need to understand certain concept to be successful on the trade. And regarding the smart finance, we are a well-known company from the past 12 years of present. This is the 12th year of our operation. And this is one of the activity of smart finance. And in this, our sole motive is to promote a scientific trading fraternity or a group of people who can adhere to specific principles and do a trade and be in the market in long run. So that is our aim. But if you do not follow any of the principle, then it is of no use for you.